Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be looking at Tesla. We know that Tesla is an EV manufacturer, but they're involved in a lot of other businesses. So the information that we're going to be covering today is the recent earnings report, and then we'll look at the price action of Tesla. So we'll be going through the financial statement of Tesla. Then we'll be looking at the chart so that we can see where are the trading opportunities based on price action. So the information on Tesla you can find on the Tesla website, as you can see. Then if you go to under investor relations, you'll find all those documents in there. The document that we're going to be looking at today is the recent SEC filing here, which is the 10Q. That is what it documents the financial statements. For those people that don't know, Tesla is listed in Nasdaq. A lot of tech companies are listed in Nasdaq, but it's not just a majority of them tech. There are other companies that are also listed in Nasdaq, which are not necessarily tech companies. So for a start, we are looking at the balance sheet, because the balance sheet tell us about the status or the nature of that business. We need to understand how are the assets and liabilities, in terms how the company is doing in terms of asset and liabilities. So now when we look at here, we're going to start with the revenue. Any business at the end of the day, it needs to bring in money, but okay, we're looking at a balance sheet, so the balance sheet doesn't say anything about revenue. Here we're looking at the total current asset, because we want to look at the comparison between the current asset and the current liabilities. So from here we can see that the total current asset, they are sitting at just around 43 billion. So that is a slight or 3 billion increase from December 2022. So here we are comparing quarter on quarter, right? So it's Q on Q, because we are looking at a 3 months period. So what we see here is that there is that 3 billion increase from the results that we reported in December 31, 2022. And then we compare the current asset to total current liabilities. So when you look at the current liabilities, we see that they are about 27 billion. Again, it's about 1 billion increase from 26 billion to 27.4. Well, it's less than a billion, but yeah, it's just a slight increase there. So what we see here, we've got 43 billion. So when you subtract the 27 billion, you are left with a positive figure that tells us that Tesla has a positive net working capital. And we love buying companies that have positive net working capital, because it means that for the next 12 months, this company is going to be able to cover its short-term obligations. So for that reason, we are interested in this stock. We are happy with what we see in the balance sheet. And there's a lot of information you can get from the balance sheet, but that is what I'm interested in, the net working capital. Then now when you look at the income statement, now like I said, every business has to generate money. So we need to see how that business generates money and how that money is spent, and then we see how much per share a shareholder is making from owning a stock in that particular company. So for us to do that, we need to look at the revenue all the way until we reach the bottom line. The bottom line is the profitability of the business. So now when you look at the revenue, the total revenue that the business generated, it's again 23.3 billion. It's an increase from 18.7 billion there. So you can see that there's a nice increase in terms of revenue. But where does that revenue come from? Remember, Tesla produces and sell cars, so you can see the automotive sales there. They had a revenue of 18.9 billion. It grew from 15.5 billion there. So we see that the actual business of building and selling cars is actually bringing in money. So that is good. We see that the company is bringing in money. So now when you look at the bottom line, the gross profit, we can see the business has a profit of about 4.5 billion. So I like buying companies that are profitable, because at the end of the day, the business is only going to be able to pass money to me if it's making money. If the business is working on a loss, then it will have several challenges. We know some companies are still building That is why some investors, they might tolerate losing a company that is not generating profit. But if there are businesses that are already generating profit, those are the businesses that I like to focus in. So now from the gross profit, you can see there's a lot of other expenses. Then at the end, we are left with a net income. So from a 4.5 billion gross profit, now we are left with a net income of about 2.5 billion, and then there's also this additional net income from other non-controlling interest. Then the net, or the total income for the period, is 2.5 billion. Now you see the stories, it begins to change. In December they had about 3.3 billion, and then there's a slight decrease of 2.5 there, now going to 2.5 billion there. Whatever the reason might be, you might plug in whatever reason that makes sense to you, but there is a slight increase. One of the things that people were citing in the US was the recession. So whatever that caused that decline in terms of net income, well, we're not gonna investigate those reasons to see what the cause. We're happy that the number is still positive. Then looking at the earnings per share, because remember, earnings per share, this is now the actual money that each shareholder gets to make. So here we see it's 80 cents per share. The earnings per share is taken from the net income, dividing it by the shares that are outstanding or that are trading, and then you get this earnings per share. So we see that again the earnings per share is a decline from $1.07 in December to 80 cents in December, now in March 2023. So there is a brief slowdown there, but it is still profitable. So at this moment, this is just what we see. Remember, we saw that Tesla is a positive net working capital. The revenue grew, the net income declined slightly. Also, the earnings per share declined slightly. So that's it that we wanted to cover in terms of financial statements. So we are happy with this result, even though there is a slight decline. But overall, we are happy. So now let us look at the important thing, the chart. Just a disclaimer, we already have a position on Tesla. So far it's working, but we will see how that position will work as time goes by. So why did we buy Tesla? The reason why we bought Tesla is because we saw that the stock previously, or just before the end of 2020, we saw Tesla breaking above this level of about $145–150 per share, and then it has been trading above this level. But then again, coming here just before the end of 2022, we saw the stock breaking below this level again. The previous resistance level was supposed to be a support level, but the stock broke below this support level, and then early 2023 it attempted to rally to try and come and trade above this level again. So now when the stock came back to this level, then that is when we started to be interested in the stock. You can see there was a breakout and then a retest of this breakout here. So now you see that this previous resistance level, again here, it failed to be a support, but it is now again acting as a support level. So now we see that there was that breakout retest. Now we're thinking that the stock is gonna try to come back and maybe at least trade to this 215 level in here. But now, depending on whether the business is going to perform a bit better, and also if there's an improvement in terms of recession in the US and all the other factors that can affect the stock, what we are looking for at this moment, we are looking to see if the stock is going to trade above this level. Even though we already have a position, we will want to add more shares if the stock break above 215, and then we are going to continue to hold that position up there. In terms of take profit, we don't really have a take profit, but this is our level of interest in here. We want to see if Tesla is going to be able to break above that level, and if Tesla is able to break above this level, then the next potential resistance level is going to be somewhere around 365 per share. So this is our short-term area of interest around 285. and then the second area of interest is 365. By short term, we're not talking in terms of a specific time frame, we're just talking in terms of potential resistance, as the share price will be moving up here. So we would like to see the share price going up. So for that reason, we are bullish on a stock, and also we have a position there, and as you can see, we already have our stop loss in here. Every position that we take is accompanied by a stop loss, because there is no guarantee that the stock is going to perform as anticipated. So whenever the stock reverses, we want to ensure that we limit our losses. Something to pay attention to: look at this 2 weeks volume there. The previous week there was that accumulation happening there, and then the recent week we saw that the price traded above average volume, which is also good. You can also see when the stock attempted that V recovery, there was a nice long green candles there showing that there were buyers that were pushing the stock higher. Again, even if you go back to this breakout level, you can see we saw these nice big green candles. So whenever we see that nice big volume happening there, it is encouraging, especially if the share price can break above this level. It would be nice if it can happen on a big green candle there, because that will tell us that the buyers are actually pushing the share price up. So that's it that we wanted to cover in this video. If you like Tesla or have a position in Tesla, feel free to share with us why you like Tesla. And if you haven't subscribed to the channel, please make sure that you subscribe and you smash that like button. We will see you in the next video.